The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. Well, you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love is kind and just. When you're in love, a smile is always on your face. You feel good about yourself, and because you're happy, you are kind. Love is also just. When you make a mistake, you pay only once for that mistake. Market-wise, let's take a look at it out here. We have the Dow Industrials down 72, NASDAQ off 15, S&P's down 6.5, gold contract down $7.80, trading at $12.0440 an ounce. Silver down 24 cents, $17.03 an ounce. Both gold and silver, folks, rejected, lower price, had lighter volume. Those babies are doing an ABC structure on the way up. It's actually a confirmed ABC structure on the way up. And today, rejected lower price once again, had lighter volume. Bottom line, they want to go topside. Platinum down $5.50 at $9.58 an ounce. You have the copper market flat at $2.60 a pound. Light sweet crude up 32 cents, $51.40 a barrel. The light sweet crude market, folks, is in a lower range. I suspect we're going to try to make a run for the $48 level. That $48 level is where the OPEC had got together. That's the high of that day. And there's some good support there. We'll see how it comes down into that level. Notes, the 10-year note down 26, 124.03. 30-year bond down a full point and 4 ticks, 150.29. Both notes and bonds, they came into their strength. They came in with lighter volume. Like to see a little bit more of a rejection of price. They did reject price. We'll see how this shakes out in the next couple of days. I do expect that they are going to go higher, meaning lower yield. Why? King dollar. King dollar, folks, up 207 ticks. You're at 101.125. King dollar failed to hold price, has lighter volume. Looks like it's set up the B to C of an ABC structure on the way down. You have a price projection of this ABC structure on the way down of 98.130. And bottom line, the number that is the benchmark in King Dollar right now is 100.600. That is where King Dollar broke out from in March. The consolidation started in March of 2015. We broke out in November of this year. Bottom line, we'll see whether, number one, does it go after that B point, which is not too far away from, and does it break it with volume? Euro. The euro is trading at 106, and the yen is trading at 114.84. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? The SPY out here today, excuse me, folks, traded to a price point of 227. You closed at 225.91. It looks to me that you're going to go after the December 30th area. The high of that area is 224.83. Below is 222. Dow Industrials. What do we have inside the Dow? Dow went after that area today. We're at 19,732. The high of December 30th was 19,852. You can see we're into that by over 120 points. The low is 19,718. And what we did do out here today, we went to 19,677. So you're coming into that area. The Dow Industrials, that is the November 30th area. Dow Industrials today did 755 million. And on the 30th of that November, we did 1.6 billion. So you can see that is not going to break easily. More than likely, that was option expiration, I expect. But that's not going to break easily. You got to come into that. It's going to build some more cars in order to come in harder for lower price. We go over to the gold contract. What do we have with the gold contract? Gold contract out here today traded to $11.95. We are at $12.0450. We did volume out here of, come on, baby, of 241,000 contracts. That was coming into 381 as well as 329. So you can see you rejected lower price. You had lighter volume. It's already in a confirmed ABC structure on the way up. Gold contract wants to move up into this 1251 area. Silver, same type of setup. What you had with silver, silver moved lower this morning. We got down to a price point of $16.74. We closed out the day trading at a price point of $17.03. We did volume of 75,000 contracts. Silver was going into 89,000 contracts as well as 82,000. So silver looks to me like it wants to make a run to this $18.95 area. The notes and bonds. What do we have with the notes and bonds? Notes and bonds moved to lower price. Yes, well, first off, yesterday you had fast price destruction without volume. When you get fast price destruction without volume, folks, that's a market that wants to go higher. Inside the bond market today, we did inside the note market, the 10-year note, you did 1.7 million contracts. That was going into 1.88. You got to a price point of 123.27. We closed at 124.03. Now, it's wild about the bond market. That is where the strength came in from January 5th. So the 124.03 is crucial. We're right at it right now. 30-year bond, what we did with the 30-year, same type of setup. 30-year bond out here closed at 150.28. You did volume of 306,000 contracts. That also was coming into its strength where it had 338. The low of the strength was 150.14. Now we went to 150.09. You rejected lower price. You had lighter volume. That's saying bonds also want higher price, lower yield. King dollar. King dollar, folks, is going to be the number out here. King dollar looks like it set up a nice ABC structure on the way down. King dollar got to a price point today of 101.710. Couldn't handle price. Had lighter volume. The price projection on King dollar is 98.130. So big moves out here. You stay right there, folks. We got our man, Mr. Bob Archer, the president and CEO of Great Panther Silver, coming up. He's going to walk us through what's happening with Great Panther Silver GPL. Going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over to our man, Mr. Bob Archer. Bob, folks, is the president and CEO of Great Panther Silver. You've heard him many times right here on TFNN. Great Panther's trading at $1.82. We do happen to own Great Panther Silver. Bob Archer, welcome back to TFNN.
Hey, Tom. Great to be here.
It's great to have you. You know, you've had a heck of a run. You know, I mean, we've had a heck of a market. Let's put it this way, in the gold and silver market this past year. You know, last January it was a heck of a run. All the equities went one way, meaning up from January to July. Then we had that pullback, and in your case, it was kind of intriguing actually because you know the rest of these equities, you know, had taken off and start moving higher, you know, the last few weeks, but you start moving higher going all the way back to November. So tell us, what's going on with Great Panther, Bob?
Well, it was, certainly, Tom, it was a great year, recovering from the lows of 2015. But you know, we had a great year last year from a production standpoint, and really got our costs down significantly. But then we managed to raise some money mid-year, and which put us in a really good position with a really strong balance sheet in order to be able to follow through on an acquisition that we had been working on for some time, and that was the Coricancha mine in Peru. And we announced that on December 19th. And the market has responded very favorably to that, and the share price has come up accordingly.
Now let me ask you, you know, I know that you have two mining operations in Mexico that are, you know, great operations. The peso itself, you know, has got hurt. Now, and that's a shame for the folks in Mexico, but does that help your expense ratio, like, you know, down in Mexico, Bob?
Mm-hmm. Yeah, no, absolutely, Tom. That's been one of the key factors in us being able to get our unit costs down last year and even the year before, because most of our costs are in pesos, and revenues are in U.S. dollars. So that exchange rate really has been very favorable for us.
Nice. Now, okay, so let's talk a little bit about this new potential production in Peru. Tell us about this.
Well, it's a very exciting opportunity. It's a project that we've known about for some time. We had an option agreement on it actually from May of 2015 through to May of 2016, but decided to terminate the option agreement, not because we didn't like the project, but just because we felt that we could do a better or have a better negotiation on the terms of the deal.
Okay.
And we've done that. We restructured the deal and finalized that, and so it's very, very good terms for us. And it's a past-producing mine. It's been on care and maintenance since 2013 when metal prices first dropped, and it's owned by a Nearstar, which is a very large company based out of Europe and a smelting and trading company. And so mining isn't really their core focus. And so they've been told by their new management to basically sell off all of the mining assets around the world. So that put us in a very good position to negotiate, a good deal structure. And the project has a very significant resource that we're going to be updating in the next few months here by Q2. And our intent is to try and place this back into production by roughly mid-2018, thereabouts. We'll be doing a PEA, a preliminary economic assessment this year, and that'll give us a better handle on the economics and so on. But at this point, we're estimating it's going to take about $25 million to bring it back into production. And the nice thing is that with the financing we did in the summer, we're fully financed to do that. We don't have to go back to market to bring this to production.
And folks, inside the mining business, when you're talking about an aspect of, let's say, whether it's 18 to 20 months, that is very quick to get a mine up and going. And I guess that had to do with they were maintaining the mine when they actually weren't mining. Would that be correct, Bob?
Yeah, that's correct, Tom. There is a fully permitted 600 ton per day plant on site, and the work that we'll be doing will be largely to conduct some maintenance repairs and upgrades and such on the plant, as well as some rehabilitation of the mine itself, and improve on some of the access ways, do some drilling underground and surface in order to better define the resource and prove up additional areas for production. But it is a very high-grade resource, and we're optimistic, I guess, at this point. You could say that at full production, the mine would be capable of putting out about 3 million ounces silver equivalent on an annual basis, which would be about a 75% increase in production for us. So it's a very, very significant bump up, should that play out starting in 2018.
Now, how cool is that? And listen, folks, Great Panther Silver, the website is greatpanther.com. Now, as you go over to that, folks, you're going to see there's a 2016 PowerPoint right there. You're going to see corporate presentation January 16th. Pull that up because there's some great information there. And I'd like to just go back to the Mexico mines just for a second and talk about the cost of production, Bob. So talk to us, because I'm going through this presentation right now, and it's pretty clear that you're maintaining some really low cost.
Yeah, that's right, Tom. We did manage to really drive our costs down last year, and as I mentioned, a big part of that was the exchange rate. But we don't have our costs out yet for Q4 or for the full year. But nonetheless, we were able to keep our costs down quite significantly, and we're fairly confident that the costs will come in below the lower end of our guidance for the year. And the company did generate free cash flow last year, even with lower metal prices, and so it was a good year all around.
And it's been a heck of a ride, hasn't it?
No, indeed. Yeah, certainly volatile. and that's makes it exciting, I guess. But it'd be nice to see some of that volatility smooth out a little bit. But I'm not so confident that's going to happen.
No,
there's just a lot of uncertainty in the world these days.
Yeah, there's no doubt, and you can see what is intriguing. Like our U.S. dollar today. My take on it is that it just failed on price and volume. So I suspect, it's going to be pretty wild if this January plays out kind of like last January going up. I guess we're all going to see how that definitely plays out. Folks, as you are listening to this, remember you can go to greatpanther.com. You're going to see that presentation right on the front page. And as you go through it, it's quite clear. There's some great numbers out there, so check it out. Well, listen, it's great having you on. Of course, we love your stock. We've owned your stock for quite a while. And it is. I know you know what I do with this price and volume deal. And I was always trying to figure out, like, how the heck is this going to get back to the high? Because when you get a high volume high, which your equity has. The way that I do things is like that's going to go back and it's going to go, test this $5 area. It's like Peru just might do it, man. It's a beautiful thing.
Yeah, no, we're looking forward to good days ahead, Tom.
Have a great one, Bob. Have a safe one. Thanks so much.
Thanks, you too. Take care.
Okay, bye-bye.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials close down 72, had the NASDAQ down 15, S&Ps are off 5. We go over to American Express. American Express just come out with numbers. American Express, folks, closed at $76.69. That's trading at $76.40. Let's see what they have to say. American Express, the largest U.S. credit card issuer by purchases, said fourth quarter profit fell 8.2%. As expenses exceeded analyst estimates and the firm set aside more money to cover bad loans. Net income dropped to $825 million, or 88 cents a share, from $899 million, or 89 cents. Let's see what we have here. So you closed at 76.86. You're trading 76.40. It's not that bad. It's not even close. It's kind of where the whole the stock closed. The earnings per share, the estimate was 99 cents. They made 91. Revenue was $8 billion. Imagine $8 billion in 30 days. I mean, 90 days. It's pretty intense, no doubt. Big Blue, let's go over to IBM. IBM just come out with numbers. IBM closed at $166.81. That's trading at $164. And Big Blue, so the estimate was $4.88. They made $5.01. Their 2017 operating earnings per share, they had an estimate of $13.74. It looks like they're going to come under $13.80. Big Blue, IBM reported fourth quarter earnings and gave an outlook for 2017 that was better than analysts had expected. IBM expects operating earnings of at least $13.80 a share compared to a $13.74. That was the average analyst estimate. In the last quarter, the company reported earnings of $5.01 versus beating the average projection of $4.77. It's interesting here. Here it's telling that the shares rose 3.7% in aftermarket trading, but guess what? That's a story that's been out there for about 5 minutes. Right now, even if they did rise up to that point, right now you're trading at 163.70. So those babies are trading into lower price. Let's go take a look. So that they're saying inside here also that IBM's quarterly revenue fell, hurt by strong dollar. Strong dollar. You know what's intriguing, folks? We are going to be hearing about that strong dollar in this earnings bout in a big way. Because if you remember, let's go to Procter & Gamble's for a second. We go over to Procter & Gamble. They come out, let's see when they come out with their numbers. They come out with their numbers January 20th. That's tomorrow. Okay, so 0700 tomorrow. So check this out. If we go take a look at Procter & Gamble, the last time that put this up. So when they came out with their numbers, the last time they came out with their numbers, they were complaining about a strong dollar. And if we go over to the dollar, I'll put this on a continuous contract. What you're going to see, okay, we'll put this on a couple years. What you're going to see is this. The quarter that we're dealing with now would be from October, November, and December. So you're dealing you had Procter & Gamble complaining about the strong dollar when it was trading at 94 and 95. Now, what we're dealing with is that at the beginning of October, the dollar was at 95. By the end of October, the dollar was at 99. In November, the dollar was at 101. And in December, the dollar was at 103. So what's going to get intriguing here is that when you have large companies, large international companies, because there's no doubt it's the international companies that will get hurt here. When they were complaining about the dollar at 95, they're really going to be complaining about this dollar. When we're talking about, if you just average that out, you're averaging that out somewhere about 99, 98, 99, maybe even 100. So you can see how this is going to shake out. This is going to, these numbers are not going to, come in. And if the numbers don't come in, this is what I've found too. When the numbers don't come in, and these large companies don't make money anyway, they're going to blame the strong dollar. I mean, that's kind of how the market works. That's how these CEOs, that's how they spin the whole deal. I remember forever they'd be talking about the strong dollar ruining everything. Then when the dollar got weak, they would never basically say that the weak dollar would help the company. What they would always drive in there, they would drive in the aspect of they're just making money. When we were just talking to Bob Archer, we were talking about the aspect of the weak peso and how Great Panther Silver can bring money to the bottom line when that happens. Well, inside the mining business, folks, all these CEOs, and you should be if you're investing in it, are very cognizant of where the dollar is and where the currency that they are using to pay all their expenses are inside that correlation. They have to, because what ends up happening is that it's an international business, but all gold mining companies, silver mining companies get paid in U.S. dollars. So what ends up happening is that we bring GPL up. What you're going to see, they're a producer right now. As they produce, they're doing like 21 million a quarter. Well, actually, they expect to do 15.5 million this quarter. They did 73 million they're expecting 73 million for the year. All of that is in Mexico. So when you take a look at that, what you're going to see is that they have 340 employees. They get paid in pesos. They get paid for their silver in U.S. dollars. You can see the correlation, pretty intense. When you go into South Africa, and you talk the Rand dollar, which we've talked many times, bottom line, Rand dollar, that has to do with, like Harmony, which we happen to own, that is 27,000 employees. You can imagine if the country that you're dealing with has a weaker currency than the dollar, bottom line, your expenses go down dramatically. Now, that being said, what had happened inside the gold market, if we go over to the Canadian dollar for a second and take a look at this, the fluctuations in the last 15 years of the dollar have been pretty dramatic. We went from, a price point of 121 down to 71. And, we're back up right now. We're trading at 101, right? And what had happened with the Canadian companies, you had many great gold and silver Canadian companies that did business in Canada. But here was the wild card, and a lot of analysts weren't even thinking about this, is that the Canadian dollar went from weakness to strength, and those companies couldn't put the big numbers down on the bottom line when, in fact, that Canadian dollar got a lot stronger. Because we stay right there, folks. We'll be coming right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Let's go over and take a look at Fannie Mae. So Freddie Mac, Fannie Mae, folks, both of these are the mortgage service companies that, bottom line, went BK. Government put more bread into them. Now they're making money hand over fist. But what did happen also is that all that money has to get put back into the government. And there's been a battle out here for a long period of time of should the government hold them? Should it go back into a private arena? What you have happening out here today is this, which is pretty cool. So Fannie Mae, Freddie Mac, they buy just about 90% of the mortgages in the marketplace, folks. They securitize the mortgages, send them out into the market. Fannie Mae is trading at $3.78. If we take a look at this, what you're going to see, you had the volatility out here today that went from 404 to 350. Since the election, these were trading at $1.63. So it went from $1.63 all the way up to $5, fast and furious. If we pull this back, I'm going to pull this back 5 years, and you're going to see the volatility that's been in this equity. You started out in February of 2013, and check this out. It was at 27 cents. So February of 27 cents. March, you go from 27 cents to $1.47. April, you go up to $5.44, and then you close out at $2.10. Now, what this was all about, this is when the large funds decided they're going to start buying this and see if they could change the aspect of the government basically not letting this company go private again. So you get court cases going on, you get all of the above. Bottom line, equity goes from 27 cents, you end up hitting $6.35 in March of 2014. By January of 2016, it's back down to 98 cents. Now it's game again. Now, the reason I'm bringing this up is that you had the potential, well, more than likely, it will be our Treasury Secretary today at the hearings in D.C. And the bottom line, he was asked quite a few questions, about Fannie Mae and Freddie Mac, and the bottom line, he wasn't endorsing a recapitalization and a release back into the private market. So it's going to be interesting because that's going to be a big number. And of course, how it traded right after the election, that traded fast and furious up, that it looked like, it would be privatized once again. Tomorrow we get option expiration. You also have the inauguration. And so what we are going to see, and the market's looking for, and they're looking, I suspect that the market's going to basically sniff this out in the next week and a half, is what has been said, where these folks that are running all these regulatory agencies, what are they going to do, how fast they're going to do it, and what companies are going to make money out of it, what companies are going to lose money out of it, because there's always winners and losers. And bottom line, in this particular case, I suspect these are going to go much quicker. One of the disconnects right now, it's not a disconnect to me, because my take is that bonds are still in a bull market. If we take a look at the 30-year bond, this is what you're going to see. And there's no doubt, this is a contrarian type of view in a huge way right now. If we take a look at the 30-year bond, you're at 150.26. Well, when you bring this back, the bond bull started in 1980. When you bring this back on a long-term basis, technically, we haven't broken a major swing point since 1999. Now, what we have done, we've done three, let's see, 1, 2, 3, 4. Actually, you've done 5 vicious retracements that are each one of them were very fast. The first retracement that was done was in 2003. The bond went from 124 to 116, to 105, and it did that in 6 weeks. That is a monster. The next one, then, it just went sideways. Let's see, what year is that? So that's 2003. It went sideways until it broke topside in 2008. So then it went 5 years sideways. 2008, it goes all the way up to 148. That's, of course, the crash in the market. And then as the market started going higher again, what ended up happening? We went from 108 back down to 113. I'm sorry, 143 to 113. That was fast and furious. Didn't break a major swing. We built cause. We went dramatically higher. In 2012, you got to 153. It took about a year. Yeah, 2 years, a year and a half. We got back down to 127. That was a vicious retracement. From January of 2014, the next level, we got up to 166. In April of 2015, we pulled back to 147, and then the next run-up was huge. You went from the 147, or you can actually say that you bring it back to January of 2014. We started off there at 127. You went straight up to 177. Now, this, folks, came back to 148.04. Well, the major swing on this thing is 147.11. It didn't break it. So when you don't break a major swing, you can go higher. The bond, the 30-year bond, is not out of the woods technically until it gets over approximately the 153 mark. And where the 153 mark is, if you're watching Tiger TV, that is where we broke out from when you broke topside in March of 15. So my take is that these bonds still want higher price. And now here's the other side of it. The other side of it is this dollar looks to me like, first off, you broke topside. We came back inside the range, and then, we broke topside. We tested the highs 3 separate times. You failed on price and volume, every one of those tests. You came back inside the range, and when you come back inside a range with wide price spread and accelerated volume, that says you want lower price, and that's exactly what we did. We come back inside the range of 100.600 with conviction. The dollar index right now looks like it's set up a large ABC structure on the way down. You have a price projection of 98.13. Bottom line, that's saying we're going to have a weaker dollar. And, we'll see, technically, if in fact it's going to be the administration that talks that dollar down, because fundamentally we should have a stronger dollar if in fact there's the amount of stimulus that's going to happen, because what would happen simultaneously, the Fed, if we throw that much of stimulus into our economy, you get the employment rate is down, bottom line, the Fed will raise rates. If the Fed raises rates, what happens? Bottom line, it should put strength inside the dollar. That being said, what I expect you're going to see is you're going to see, whether it's Europe, whether it's Asia, they're going to have a hard time. They have a hard time, and their markets go south. Guess what? What are they going to do? They're going to buy U.S. bonds. That brings the bond market down. It simultaneously keeps the dollar down. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. We had Big Blue, IBM, come out with numbers. Numbers were good. They said things are going to be good in 2017, but bottom line, it's selling off by about $4 to $5. IBM closed at 166.81. That's trading right now after hours at 162.97. American Express also come out with numbers. American Express closed at 76.69. That is trading at 75.94. They were a little light with it. Well, the earnings per share were pretty good. Bottom line, as though is that they didn't. Well, their revenue is higher. Their earnings per share was lower because their expenses were higher. As you come over to our website at TFNN, folks, you're going to see right on the front page, live event with Tom O'Brien, free to sign up. What this is all about, I'm going to be doing a live event a week from today, from 6 to 7 o'clock at night. No matter where you are in the world, you can get it. It's going to be a webinar. It's going to be a lesson in trading the nugget and the dust. The nugget, of course, is the 300% bull position in the gold equities. The dust is the bear position. We know how many of our listeners trade these leveraged products. I happen to love them. There's plenty of people out there that do love them. But I'd like to walk you through exactly what they're all about, technically, fundamentally, and then how they're structured. Inside that hour workshop, and it's a free workshop, we just need your name and your email. I'm going to be talking about the composition and mechanics of the leverage ETFs, how daily rebalancing works, and how compounding works. So compound is really crucial to get your head wrapped around, but I'm going to have a lot of great examples so you can see how easy it is once you get to understand it. We're going to talk about how they compound when markets rise steadily, then how they fall when they decline steadily, and then when markets are flat but yet volatile, meaning that you get a choppy market back and forth. Then we're going to get back. Then we're going to get into the actual trading of the dust and the nugget, and we're going to be talking about there, how you should be looking at the dollar, meaning whether you're a bull or a bear, and then we're going to take the breakdown of the dust and the nugget, meaning the equity weightings of the dust and the nugget. When you take a look at the dust and the nugget, folks, at the bottom line, you want to be all over Barrick Gold first, ABX. That's the largest weighting structure right now. It's trading at 1692. Newmont is the second weighting, and these guys go back and forth, but bottom line, you want to understand where that is, and then we're going to go through the rest of them so you can really get a much better understanding of how, number one, how the leverage product works, how they compound on the way up, so that'll be a positive compound. The compound on the way down is a negative compound, and then the whole structure in itself. So check it out on the front page of TFNN. It's a free workshop. It's a week from today, 6 to 7 o'clock at night. Just your name and your email. And we do not sell our emails. We don't sell names, all of the above. Just you can check that out. You stay right there. Our man, Mr. Andy Heck's going to be coming up next. He's going to be growling and prowling with you. Tomorrow, of course, big day tomorrow. You have the inauguration. You have option expiration. You have all of the above. The way this market is set up right now, what we did have inside the small cap arena today, you had the small caps have an expansion of volume with price. That's saying the small caps are going to continue lower tomorrow. Inside the NDX 100, you had a failure on price, failure on volume. That's saying the NDX 100 also wants lower price tomorrow. The Qs closed at 122.98. They made a high out here today of 123.65. You made that high. You talk about anemic volume, folks. They made that high with 12.6 million shares. It got into the last high that was generated out here, which was last week, where it had 16.9 million shares, and that was anemic in itself. Pretty wild. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and have a blast with it, folks. Everything you need is right inside you. Go have a blast with it. Stay right there. Our man, Mr. Andy Heck's coming up next, folks. Wow! Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Heck's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.